Hello, everyone. Very glad to see you again. I'm Charlie Tian. If this is your first time coming here, I'm Charlie Tian. I'm the founder and CEO of GuruFocus. And I'm very glad to see you again. And say hello to me. I want to hear from you. I want to know where you are. And I'll be very happy always if you can hear me. Yes, you can type in the chat area and say hello to me. And if you cannot hear me, of course, you can let us know that you cannot hear us. Okay, and I haven't seen anyone type there, but again, I hope everyone's doing well. We know that the market is not very pleasant and not very friendly this year, but as value investors, we think that the valuation is now cheaper, definitely cheaper than it was the second half of last year, and we'll make better opportunities, and certainly. First, let's review the market, and I will share my screen with you here, and so that you can see some of the features in the meantime, and it will show you how to look at the overall market with what we have. And Cindy, can you turn on the sharing function for me? Yeah. Okay. Okay. Now let me share my screen with you, and let me share here. Yeah. Okay. And I think you can see my screen now. This is a homepage of GuruFocus, a new homepage. We made quite a lot of changes lately, and it is now a dashboard. And it's fully customizable. And one area I want to show you is the market. And actually, this area says it shows a statistics of what's going on with the market. It says U.S. market. If we select here, I select SPY, I select SP 500. It shows how many stocks are up, how many stocks are down within the SP 500. You can see that today SP 500, among SP 500 companies, 294 is down and 204 is up. And here, this chart actually shows you which companies are up and which companies are down. And if you just look at the overview here, you can see Berkshire Hathaway is up slightly, and lots of value stocks, I would say, the traditional industry stocks today. Berkshire Hathaway, Johnson & Johnson, Pfizer, the drug companies, and also the energy companies, ExxonMobil, Chevron, they're all up here. And the technology companies, the giant technology companies are not doing very well today. Look at Microsoft, Apple, Amazon, Tesla. They've been doing poorly. And here with this chart, you can see the general market. Here, actually, this chart shows you sector performance. Today, the utility sector actually did the best. Of course, we don't want to just see one day. We want to see, for instance, 1 week here. You can see 1 week, within 1 week, utility is still the best performance. Energy was the second best. And here the consumer cyclicals. Consumer cyclical is the worst performer actually over the last week. And if we look at 1 month, healthcare was the best one. Communication, healthcare were the better ones. And if we just look at this year, just click on YTD here, can look at this year, energy on average was up 28%, which is a best performing sector here actually today in the US market. And that's probably why lots of growth investors were having a hard time this year. And we know that technology and healthcare was the worst performance this year, and energy was the best performance this year. And this gives you an overview. And most of this chart you can link out. They're linked out. If you click here, for instance, it gives you a more detailed picture, give you more options to select, and you can even look at your own portfolios, for instance. Look at your own portfolios on this kind of chart, SP 500 here, and the NASDAQ here, for instance. And most of this will give you all these options so that you can play with it a lot more. If I go back to the homepage, and I look at the overview here, and this one also you can click on it and study it more. For instance, if I click on it, it load a little bit. Of course, it needs some time to load, then give you a bigger picture, a bigger view of what's going on with the market. Okay, yeah, it's loaded up. Here you can see it's a same chart, but you can change it to a bubble chart. You can also change the aggregated performance chart. And the one we just showed is called a map chart here. And then you can change to NASDAQ, for instance. Here, this is what I'm showing here is S&P 500, but you can also change to NASDAQ because there are lots of data here, and the loading taking a little bit of time here. And yeah, that's a feature we actually developed, and I would definitely look at these features. If I go back to our homepage again, go back to homepage. The homepage, I was showing you the features, and one feature is you can move this around, so you can move these modules around, so everyone can set up their own dashboard to fit their own needs. It's fully customizable. You can add to the dashboard here. You can add from the general areas. You can add from your own portfolio here listing the portfolio I created over the years. I have a lot. You may not have that many, but you can create your own portfolio to display it on your dashboard. There's also the economic data, and you can search from more than 4,000 series of data, which you can add to your dashboard. I just show here, I show the market condition indicator. That's something we developed, show you the current market condition. And another one is the oil price here. And you can add your own. And here is a treasury, the yield curve, actually. The yield curve, we know actually very clearly that the yield curve is now inverted. And if you study a little bit about the yield curves, you will know that most of the times when the yield curve inverts, it implies there might be a recession coming. And I am not sure about this one, but at least the previous inversion, yield year inversion, always came together with a recession and market crashes. And today, actually, the yield curve is inverted. This is a difference, the yield difference between the 10-year Treasury and the 2-year Treasury. Usually, the 10-year Treasury will have a higher yield, but 2-year Treasury have a lower yield. But now it's inverted. And actually, here you can go to the yield curve. We have a yield curve page which shows you the current yield curve. It's this one, and this was last year. This was the year before last year, so 2 years ago. So last year and 2 years ago, you can see it was very steep yield curve, but this year and today the yield curve is totally flat and even inverted a little bit. And so it's not something. The economic data and the macroeconomic data is not something we focus a lot, but in the homepage, you do have the options to add all of this to your own dashboard. And you can create your own dashboard so that you can generate an overview here and you can remove the modules you don't like, you can add the modules you want, and we will make almost every feature of the website available in these modules, and you can add it to your own dashboard, including the portfolios, the stocks you track. This way, the dashboard will give you a very good overview of what you want. That's something we're still improving, and always give us feedbacks. Always give us feedbacks, and we want to improve. The way to give us feedback is actually very easy. Just we have a support here, support link here. You can create a ticket, create a support ticket here with your feedback, and we will always consider it. And also, if you have suggestions on features or anything, we will always consider it and create a ticket here. We will look at it and get back to you. Doesn't mean that we will always implement everything you suggest, but we definitely consider every one of them. Okay, that's about the dashboard. Again, we're still improving it. We want your feedback. One big thing we released today, actually, we released recently, is a new summary page, the new stock summary page. For instance, any stock you want to take a look, any stock you suggest, for instance, I would say ExxonMobil here. I will just randomly pick a stock here, and this summary page. This is a new design of the summary page. You are probably looking at the old one. This is the old one, and we actually released the new one. If you just click on this try new summary, you will be brought to this new summary page. It has all the features the old one has, and we want to make it look better. We also want to make it customizable. With the old design, it was not possible, and with this new design, we will make this customizable, so it will be like a dashboard for this stock only, for this company only. And we're still working on this, and yeah, give us feedbacks. This is not finalized. I'm not sure how many of you have seen this new summary page. If you have seen it, let me know how you think about everything: the content, the positioning of each modules, the colors, the feel, and the easiness of using everything. And let us know, and we want to improve it to the best possible results. And this, I'm sure that you are familiar with this financial strengths, the profitability rank. That's something we have here. We have had it for many years. And the Guru GF value rank, that's something new. I will explain a little bit more. I will explain more a little bit later. And we will also add an area for growth. And another thing we will add is for momentum. This is something we added. And last time I talked about this, but I will talk about it a little bit more. Again, the financials. That's this chart. I look at them all the time. Actually, it give us a very good review of the financials of what's going on with the company. The first important one is the revenue and the net income. You can see ExxonMobil having a quite hard time due to the oil price crash since 2014, I think. And the revenue dramatically declined, the profit declined, even had a loss. Of course, now it recovers. This year it recovered quite a bit. The reason is because the oil price, obvious, the oil price went up. This is an annual chart. You can easily switch to a quarterly chart. This is a quarterly chart. You can see that over the past few quarters, the revenue of ExxonMobil has been going up every quarter. The reason is, of course, the oil price. The profit is also going up. And that's why the ExxonMobil stock has been doing very well over the past 12 months. And it went up like 50%. And I don't know how it will go in the future, but yeah, the oil price went up. The energy stock, of course, will go up. That is why That is why the energy sector was the best has been the best performing sector this year. And okay, I got a request. I will show the dashboard slightly later, and I'll show you this homepage first. And yeah, and this area, the cash and debt, this chart is about the balance sheet. It very straightforward, tells you the cash position, the debt situation of the company. And you can clearly see ExxonMobil, this asset heavy, capital heavy companies, they always have high debt, like ExxonMobil. Although their debt has been reducing because oil price going up, the company is making more money, the debt has been declining. That's a good thing, but it's highly cyclical and it's highly related to the oil price. I showed another company, one Microsoft, the company that has a cash cow of the software. You can clearly see that Microsoft has more cash than debt, always had more cash than debt. And the cash was increasing a lot quickly, but it didn't increase as much. I think the problem is because you can see they have been paying down debt and they bought back stocks, they paid dividends, things like that. And the revenue has been consistently increasing. So compare with ExxonMobil, Microsoft, I would say it's a much better investment over long term, at least. And last 12 months, Microsoft may not outperform ExxonMobil, but over 10 years, 20 years, Microsoft was definitely a much better company. And this chart shows you the cash flows, the operating cash flow, the free cash flow, net income, cash flow from dividends, things like that. And this is a return on invested capital and the weighted average cost of capital, and also their difference. We know that when you invest, you always want to have a company which has higher return on invested capital than its cost of capital. And that this chart tells you that. This is GuruTrade's chart, a summary GuruTrade's chart, an insider chart, some insider trade GuruTrade information. The Peter Lynch chart. That's a chart that Peter Lynch used. We designed as close as possible to what Peter Lynch used. And basically, Peter Lynch said that when the price line, the green line, went above the value line, which is the black one, actually, the stock will do poorly. When the price is below the value line, stock will do better in the future. But it doesn't work that way all the time. We made some modification to it, which is a red line. We think a more reasonable value line is probably the red line. But that's something you can refer to, reference, use as a reference. And this chart shows you the performance of the stocks and the Microsoft and compare. You can add other tickers here to compare, add tickers to compare. This is a summary page we updated, and we're still making this better. Where again, we want to make this also as into a dashboard, so that you can customize it. You can customize it, and it will only show for you. It will only show the boxes, the modules you want to check. Okay, now I go back as I got the request about what I was showing on the home page. Okay, some modules I have on my dashboard. Of course, this is the article area. You can move all of them. You can remove it also. You can remove it if you want. And one thing I have here is called market condition indicator. It's something we developed. It tells you the current market condition. With 5 is the best market condition, time to invest probably. When it's 1, it's a worse market condition, not very good time to invest. the factors we look at, we look at for this, we developed for this is factor we look at it for this market indicator, market condition indicator. It includes valuation, the momentum, the insider trend, and the treasury yield. I think the treasury, the interest rate. That's something we developed. We can see that the market condition was very good in starting 2009. It was the best. Then it declined some in 2013. Declined still very good. Became neutral 2018, and became not very good in 2021, May of 2021. Went back a little bit, I think, in March due to market decline. I think now it comes down again due to the recent recovery of the market. I personally think it's a pretty good reference of the market condition. When it's 2 and 1, we need to be cautious. When it becomes 5, it's definitely time to invest. And okay, that's a module I have. I showed you that's a crude oil. And okay, this one is it's a yield curve. It's something you can add to your own dashboard. And this is the insider trend. Not sure how many people, or if you are familiar with the insider trend or not. If you are familiar with insider trend, let me know. I'll be happy actually. I hope that's something you pay attention to. Studies have found that the insiders know pretty well about when to buy and when not to buy. Peter Lynch famously said that the only reason that insider buys is because they think the stock will go up. And consider that the insider, this is a buy-sell ratio. So when this ratio is high, it's always a good time to buy. Consider this was in 2008 to 2009. We had a market crash here. And this was 2012. I think it was 2011. That was a government shutdown more than 10 years ago. Here was a market correction. I think another correction. This was March 2020. March 2020 market crash. The insider knows really well when to buy. In March 2020, it was a great time to buy. Quickly, the market recovered. And now, unfortunately, the insiders are not buying, unfortunately. If you want to learn more about this chart, you can look at the insider trend here. It's under insiders and the insider trend. It's actually this type. It shows you the insider trend. Actually, this green bars here, it's the same as the one I just showed on the dashboard. This blue line is S&P 500 in this case. You can see that, yeah, this was a 2008, great time to buy, 2008 here, and 2011 here, good time to buy, 2014, 15 here, and 2020, March 2020, insider quickly bought a lot after the market crash, and then they stopped buying, and the market recovered quickly from the crash. And now, as I said, unfortunately, they are not buying. The insiders are not buying at this point, unfortunately. So maybe you need to think about that too. This is in CEO bias chart. The CEO, what CEO is doing. These are what CFOs are doing, and these are different sectors, financial sector. Here you can see the sector's behavior can be different. The financial sector, which is quite general, quite similar to the general market, and this is real estate. I think energy will be interesting. Energy sector will be interesting. Energy sector behaves quite different from the general market. In 2008, market crashed, energy stock crashed too, the insider bought. And in March 2020, we know that the oil price went to negative. And if you still remember that, but the insiders of the energy company, they were buying like crazy. They were buying like never before. And it was a great time to buy energy stocks. And then the energy recovered dramatically. It has been the best performers over the last 12 months, last actually 15, 16 months, I would say. Yeah, that's about the insiders. That's I think that's something I like to check. I like to check all the time. That's why I put it into my dashboard. I put it into my dashboard, which is which is this one. It looks slightly different. It looks different, but it tells us the same thing. Any questions so far? Any questions? I would love to hear from you, and I will answer your questions whenever I can. As detailed, as comprehensive as possible. Okay, seems like I got no questions. Now I will go back to the dashboard. Okay, here I'm in the dashboard. Looks like it looks. I come to a company called Costco. Everyone knows about Costco. It's one of the Charlie Munger's favorite company. The stock has been doing extremely well. Actually, the stock has been doing very well. Even in this year, we know that the market hasn't been very friendly, not very friendly, but it came down some. In January, but then it has been doing very well. The Costco stock. One thing we added to the home of the stock page is a GF score. It's called GF score. We give every company, whenever there's enough data, we give every company a score. And we'll give every company a score, where the score is from 0 to 100. And 100 is the highest score, of course. And this score is actually composed of 5 components. The first one is profitability, growth, the financial strength, the GF value, and the momentum. That's the 5 factors we consider for the GF score. And we rank every one of them. And then we did backtesting from 2006. So many years of backtesting, more than one market cycle. Then we rank of these factors. Then from these factors, we came up with this GF score. And we found that, okay, actually, I actually have a detailed writing here. Yeah, we found that for GF score, this is, for instance, this is a GF score, the green line here, which is a GF score when it's above 90. The performance is much better. The group with the highest, the highest GF score has done the best. And the Costco has been now in the second group, although it's not the best performing stock, but it's in the second group. It will still do pretty well from according to GF score. And of course, there are different groups. The group with lower score, for instance, this one, the light green one here, it's between 61 and 70. It should actually give us a negative return over the long term, even from 2006, give us a negative return. And the lower score will be even worse. And this article shows you how each component of the GF score, each component of the GF score was doing, and how they were ranked. For instance, here the financial strength rank. Costco financial strength rank is 8 out of 10. The rank we used, the parameter we used is interest coverage, the Altman Z-score, the equity to asset ratio, cash debt ratio, and also debt to revenue ratio. These ratios are used to come up with this financial strength rank. And Costco's 8 out of 10. It's not the highest rank, but this is a historic performance of different ranks. We can see that as long as it's ranked high enough, like 5 or 6, it's pretty good. It's good enough. It doesn't, as long as the rank is high enough, the performance difference is not that big. The difference is not that big. And similar to the profitability rank, Costco does have much higher profitability rank. It's 9 out of 10. The parameter we used, operating margin, mean operating margin growth, the F-score, the business predictability, the 5-year revenue growth, and the 10-year median ROIC. A number of years that was profitable in last 10 years. And we can see that the growth factor is a more sensitive, the profitability rank is a more sensitive parameter. And when it's higher ranked, it does have much better than the performance than the lower ranked stocks. It's a more sensitive parameter. Growth is actually also a very sensitive parameter. The higher the growth is, the higher future returns are. And Costco has a growth rank of 10 out of 10, the highest ranked growth. And then the GF value rank, which is ranks of valuation. We found that valuation rank is actually not that sensitive, not that sensitive. And also we found the lowest valuation does not correspond to the best performance. That's actually, I explained last time. When we, as value investor, we always think that when a stock is lower valued, as the least valued, the lowest valued, the stock should do better. But actually, it's not the case. And actually, the group that does the best are the ones that are relatively undervalued, but not the lowest valued, not the most undervalued. And I think it's related to the quality. When the market is actually quite efficient, when it's most undervalued, it's usually due to the quality issue, and usually it can be stock the value traps. That's GF value. That's something I want to emphasize. The most undervalued stocks do not have the best returns. The best return group are those which are undervalued, but not the most undervalued stocks. And when we do the rank, we always rank the ones that are undervalued, but not most undervalued as a highest rank. So here, as long as you're using the highest rank, you're fine. We already considered the factor. And the momentum actually has similar behavior with the valuation. Not the stock with the highest momentum will do the best. The stock with medium higher momentum actually did better. Those are the factors we considered, and we will we develop this GF score for every stock here. And okay, someone's asking if GF score available in a screener. Yes. And all the stocks, the ranks, and GF scores available here. This is the GF score. If you just want to the stock scores that's 90 and above, can just click there. You will see. Okay, I want to see more information. I just turn on it, and okay, see more information. If I just ROIC, I'll just show. I just turn it on so you can see more information. And let's look at the stocks. Actually, there are lots of companies. There are more than 600 companies. If you want to narrow down, this is 90 and above. If you want to say, I want 95 above, you just change this 90 to 95. You don't have to only use this selection list. You can fill it in, actually. You can fill it in. Now I only have the 90 and above. There are 200 of those. Yeah, these companies are usually the highest qualities, and you can show. I'm here show their profitability rank, their financial strength rank, and also their GF value rank. Yeah, and here and okay, screener somehow is a little bit slow today. I will ask our developers to look at that. Here you can see that when you click on that, I just show and I select the GF value 90 and above, 95 and above. Then we will see. Actually, you can always add the parameters you want to check. You want to see the dividend. You want to see dividend. You don't want to filter on dividend. You just want to see dividend. You just click on this little eye here. Click on it. It will display here to display the dividend yield. Okay. Okay, it shows you the dividend of these stocks. Okay. Somehow the screener is a little bit slow. I will definitely ask our developers to take a look. Why is this screener so slow today? Okay. Yeah, it shows you the dividend. You can filter more. Okay, let me. Yeah, it's available. Again, it's available in all-in-one screener, and we got a request to add this into the portfolio view. We will add it into the portfolio view. Okay, Previous is asking, is there a plan to monitor the performance GF score going forward? Yes, definitely. I think we should ask people to create model portfolios to monitor the stock with the highest GF scores. I'm not sure, maybe it's not done yet, but we will create model portfolios which may monitor the stocks with the highest GF scores, certainly. And actually, you can also, with the screener here, you can also, after you do filtering, you can put this into a portfolio. You can just by here, add to a portfolio. You can create a new portfolio. You can say called GF score monitoring. Today is April 6, 2022. You can do create your own portfolio here. It's created now, and then it will start to track the performance for you. You can definitely add more filters to it. That's also a way to monitor it, but we will be adding the model portfolios to our model portfolios, which monitor the stock with the highest GF score. Any questions regarding to the GF score, the ranks, any problems you have? So far, as I said, I love to hear your feedback on the new stock summary page. I think this page, I think this is a cool feature. Here you just click on any stocks which is related to, it. You click on it, it will show you the features. Okay, and yeah, that's a summary page, and that's a GF score. I hope you will find it useful, and I think it's useful. I think it aligns with the philosophy I have. which is always investing the most profitable companies, and not very strict on valuation, but the quality is always the first thing. It doesn't mean that it will always do the best in terms of short-term performance, like even 12-month performance. It doesn't. But over a long term, I think they're safer, and they will do better than the cyclical companies. Okay, thank you. Okay, a question. Dan is asking, how is GF fair value score is calculated? You're probably implying the GF value here. Not sure. I'm not sure GF fair value score. Okay, I'm not sure what you're asking. GF fair value score. Probably you're asking this GF value, how it's calculated. We use lots of parameters in this. Also, it's related to the historical backtesting, historical performance, and our experience. And we used parameters like price to sales, price to book, and also considering the future growth to come up with this GF score. We don't want to discuss too much the details here, but the stock does need to have long enough history, at least I think 3 years of history, to have a GF score. For instance, this company, GFL Environmental Inc., it does not have a GF value, and the history is short. The company went to IPO in less than 2 years ago. So in this case, the ranking will be low because we don't have enough data. The score will be low. Some rankings missing because the company does not have enough data. Yeah, that's the situation. And I think the screener is the summary. The screener and the summary page are the most important features here. Another feature is a 30-year financial page. I'm not sure if you're familiar with this page. If you're not, I actually highly recommend you to check out this page. This page, it's the most useful page for getting the financials. You can jump to different sectors easily. You can go to the balance sheet here, cash flow statement here, and jump it to each section easily. The financial, this is the financial page. The valuation. Yeah, those are the most useful features, and also the interact chart. I'm not sure if you are familiar with this. If you're not, also highly recommend it. Here you can easily just add series to it. You can remove series easily. You can, yeah, add and remove seriously. The series you can also compare with a different company, where Costco, for instance, and compare the stocks and compare their P/E ratio. Compare everything. Compare their P/E ratio in this case. And okay, in the meantime, if I remove the stock price and compare that with the P/E ratio. Okay, let me look at the questions. When investing, okay, it seems like I got 2 questions regarding to Chinese companies. When investing in Chinese companies, would you recommend OTC on American market or buy shares on Hong Kong exchange? I think that depends. I think it depends on volume. The funny thing about the Hong Kong market, same company, the Hong Kong market and OTC in US, sometimes the OTC will have much higher volume than the Hong Kong market and commands a higher valuation. The valuation can be quite different in Hong Kong market and in OTC, even for the same company. I think I think you want to probably invest in the market where you have more liquidity. That's what I think. Okay, another question is by WK. What do I think of the recent China Security Exchange change on audit in Chinese stock? I think I will not know what the Chinese government will do, but I think I want to be cautious and conservative on this. I don't want to be caught into empty hand. I don't know what to do, and that's a high regulatory risk. A regulatory risk is always something we want to avoid. It's something out of our control. Okay, John is asking, is there a relationship between the ETF, GFJF, and GuruFocus? Yes, and ETF, GFJF is managed by myself. And the strategy actually was based on the most broadly owned portfolio here. The model portfolio, under model portfolio, the strategy is based on the most broadly held portfolio. It's this one. And historically, it has been doing very well. Over the last 16 years, it outperformed 13 times. It doesn't outperform every year, but it does outperform most of the times. And ETF, GFJF is managed by myself. I'm not allowed to talk too much about it, but you can always ask me privately, Charlie@GuruFocus.com. Okay, another question. On the GF app, give a fair value of Costco. Okay, let me go back to the question regarding to the Costco question. On the app, give us fair value of 400. Okay, about 400. GF value is 530. Okay, 430, 440 about. Okay, I think we need to display this actually. We need to display this. GF value 440. Okay, I see. As I mentioned, that's the that's the GF fair value, and it was derived from the historical price to sales ratio, price to book ratio, and also considering the future growth of the company. Okay, another question. Can you search companies by free cash flow yield from all-in-one screener? Yeah, you can definitely do that. Let me show you how to do a free cash flow yield. Okay, I come to all-in-one screener. If you don't know, I don't even know if we have that, assuming I don't know. I just search. I come to this all button. It should display all of the. Okay, I just search yield, and you can see everything related to yield. Everything, okay. Dividend yield, earning yield. Okay, so we don't have one there, but the price to cash flow, if you think a little bit, if it's actually price divided by free cash flow, actually. Free cash flow yield. Okay, let me search free cash flow instead. I just search free price to free cash flow. It's actually here. Although we don't have a free cash flow yield, but we have a price to free cash flow, which is actually similar, which is inverse of the free cash flow yield. Or maybe you want enterprise over free cash flow. It's this one. EV to FCF, it's this one. So either of those, depending on definition, you should be able to filter it. If still you think it's not what you're looking for, you can always come to this customized and add filter here. And you can see FCF yield. You can call it FCF yield as you want, anything as you want. Then you just search free cash flow here. You can see free cash flow. And then I'm not sure how you define it. If you want to define it as current price, then this will give you a free cash flow yield as your definition. And you can have it higher than a value, higher than 2, for instance. Yeah, display expression result. Okay, then I confirm it will start to filter with a customized filter. See, already a free cash flow yield results here. It's how you can always find a way of doing it with our all-in-one screener. If it's I showed you price to FCF and EV to FCF, but you can always define your own also. Okay. Another question. I hope it's clear. Do I plan to have ETF based on most predictable? Yes, actually, I plan to have a second ETF when we have enough capital. We'll start the second ETF on the actually high quality stocks, high quality predictable companies, and by the way, that strategy we also have a model portfolio here. It's model portfolios. It's called high quality low capex U.S. companies, and actually this model portfolio has a shorter history, and last year it did really well, but this year it underperformed a lot. But overall, since inception, it actually did similar to the market. But this year it has been doing poorly, because this strategy is more toward growth. So that's why this year all the growth companies are not doing really well. So that's why this strategy did poorly, much worse than the SP broad market. But I think long term we can still do very well. Okay. Can someone living in US, in Europe, invest in GFGF? You have to find a broker. I think you try interactive brokers of Fidelity. Try Fidelity and try the retail brokers. Try those. You will have to contact them and try it, depending on where you live. Of course, you can, as long as you can find a broker that support it, you should. Okay. Okay, I see the next question, idea. Could you make once a practical detailed access to analyze the stock from the very beginning, going step by step through the complex set without losing myself in the process? Okay, I think that's a good suggestion, Thomas. And yeah, we may start. We have some videos actually about it, but we'll definitely consider this and doing some of that also. I will think more about it with what we have, and to show you how actually the five aspects of the company. Which is profitability, the growth, the financial strength, the valuation, and the momentum, with these five aspects of actually show you how to do it. By the way, if you have any question, any stocks, any companies you have in your mind, and you can suggest to us, and we will actually analyze that company. It will work better for you, I think. Okay, is Bernholder is asking Web3 firms a point of interest for me. I think it's something too new. It's something too new. We don't. I actually don't invest in companies that has not proven itself. Warren Buffett said that he want to invest in good companies at reasonable prices. A good company, he said that it's a company with predictable and proven earnings, predictable and proven earnings, and managed by capable people. So you need to have at least a proven and predictable earnings. And I don't think Web3 companies are those kind of companies yet. They haven't proven themselves. What value tools, GuruFocus tools available for checking macro conditions among the other indicators? We actually have tremendous amount of macro condition here. It's under this market tab. You probably know that we have this Buffy indicator, which tells you where the market valuation is. And we also have Shiller PE. The Shiller PE, which tells you also again where market valuation is. We also have a sector, industry overview. Industry overview. It tells you where each industry is in terms of the valuation. Let's see which industry has the lowest valuation now. Actually, the industry that has the lowest valuation is the home builders, the steel companies, the credit services, the financial services, the lowest PE ratio. Actually, about 2 years back, here the energy companies, the oil companies, has the lowest valuation, and with a PE ratio of 6 or 5, I remember. But today, the energy company has a PE ratio of 10, which is much higher than it was before. And we can even look at the Shiller PE ratio, because regular PE ratio it does not consider the cyclical factor of the economy. If we look at the Shiller PE ratio of companies, the most cheapest companies actually the financial service companies, among energy companies, the other energy sources. I'm not sure what they are. Financial companies, asset management are actually very cheap. Home builders are relatively cheap also. And the overall oil companies actually not that cheap anymore. The Shiller P is now around 20. That's something you can use. And also the economic indicators. Here we have plenty of economic indicators, about 4,676 indicators covering the market trend, the production business activity, prices, money, banking, finances. If I just click on the production and can see business activity, you can click, and each one you can see in construction and the total private spending. Plenty of data, lots of data here. You can play with it. By the way, you can also add any of this series into your dashboard, into your homepage. And that's something you can use. I encourage you to use. You can add any of those parameters into your homepage. You just actually add to dashboard here. Click on economic data. You can search here. When you search here, you will be able to add them. I think there are, for instance, Chicago inflation in Chicago housing price, SP 500 Shiller housing price. I just want to add the Chicago home price here. It's already here. That's something to play with. If you don't want it, you just click on it, remove it. It will be gone. Yeah, that's how you can use our dashboard. Okay, the time is up. I'll give you 2 more minutes if you still have questions. If you don't have questions, we will see you next time. Again, always feel free to ask me questions and subscribe our channel and give me some ups on this here. It will be helpful. And again, I'll be here again next month, always on the first Wednesday, 1 p.m. Central Time, Texas time, 1 p.m. I'll be here. And thank you very much for coming. I'm glad to see you again. See you next time.